Okie dokie. The election is over, the FOMC cut rates another quarter point, and Dana Point Real Estate, well, let's talk about it. If we haven't met, I'm Nathan Necochea, and I'm a real estate agent here in Orange County. Now, not everyone loves data, but understanding it keeps me focused so that I can act faster and louder while still having some fun. Now, let's get into it.
Maximum effort.
Let's start off with the overall picture of the Dana Point market, the Market Action Index. This is a measure of the comparison of sales to inventory and lets us know if the market is currently favoring buyers or sellers or if it's achieved balance. Leave a comment below if you think the election or the rate cut will have a bigger impact on our market. Last week, the Dana Point MAI bumped up about 1.25 points, leaving us at a rounded 36. That's a move in the direction of sellers, but it's not quite a significant one yet. It's probably going to take a couple of weeks to really see the impact of the election results and the quarter point rate cut by the FOMC. But if the reactions of the crypto and stock markets tell us anything, we could be looking at an atypically busy fourth quarter for real estate. Now on to the average and median days on market. I do think that the median gives a more accurate picture, but the average is just good to know. That is, as long as you can set aside the fact that compiling the days on market for a $1 million home with a $20 million home doesn't really do much to inform a $1 million buyer. So the average days on market for Dana Point is up about 2 weeks to 113 days. With so little inventory available in Dana Point, I strongly believe the homes that haven't been selling are skewing the data across all the market segments. But let's take a look at the median days on market to kind of find out. Well, the median days on market for homes in Dana Point sit at just 67 days. Now, this is an increase of about 11 days from last week, but when you consider that this includes all price points, 2 months on the market is still pretty fast. Now for the percentage of homes with price decreases and price increases. This is going to give us an idea of whether sellers have just lost their minds and if there's any indication of investors really flooding the markets, or if there's a huge bump in demand. The percentage of Dana Point homes that saw a price decrease sits at just 31%, which, if you've seen any of my other WTF series videos, is perfectly within the normal range of 30 to 35%. So this is telling us that most sellers are pricing correctly for the market and that buyers are really just agreeing with them. The percentage of homes with a price increase dropped a point from 6 to 5% last week, and this is exactly what we expect to see in just a normal market. If that percentage goes up, we're either looking at a huge jump in demand or an influx to the market of investor activity. Now on to what has been the Dana Point outlier for the past couple of weeks. The percentage of homes relisted. Yay! Well, the percentage of homes relisted did drop a tiny bit last week, but with rounding, it held at 14% for the fourth week in a row. I don't think this is any indication that fix and flips are hitting the market because the percentage of price increases doesn't seem to correlate. And because of that, I think we're looking at previously expired listings coming back to the market with a refreshed and more enthusiastic outlook. And moving on to inventory and the market segments, this is going to give buyers and sellers an idea of the most active price points and show where they might be seeing the most or least competition. Across all market segments, the housing supply in Dana Point dropped again. Last week, we went from 64 to 58. Is that a great sign for the options of buyers? No, it's not. Is it a great sign for sellers? Yes, it is. Why? Because sellers have very little competition, and even the little competition they have is dwindling more. That means more market share, more buyer attention, and it could mean faster sales. But let's take a look at the individual market segments so we can get a more clear picture of where inventory is being absorbed and where it's being added. The bottom market segment added 1 new listing and had 6 absorbed. The lower market segment had a push week with 1 listing added and 1 absorbed. The upper market segment had kind of a down week, I guess, with no new listings added and 1 absorbed. And then the top market segment also pushed with 1 listing added and 1 absorbed. So if you've been thinking about selling your home, particularly if you're within the first 3 market segments, you're looking at very, very, very little in the way of competition. You have a phenomenal opportunity to market your home and attract buyers. Buyers, you still have opportunities. Just take a look at the difference in the average days on market and the median. With the average being so much higher, it's telling me that there are at least some homes that are just being overlooked or just aren't being seen by potential buyers. Target those if you haven't found anything else yet. I know that there's a deal out there for you. And don't forget to like, comment, and subscribe. Share this video with someone you think can use the information, because sharing is caring. And thanks for watching. Until next time.